Hello, everyone. Great to be here with the two of you. We have a lot to talk about when it comes to culture and capital. As I was thinking about the two of you, this sort of Venn diagram that the two of you have in terms of your experience is fascinating. Let's talk, if we can, about sports as an asset class. I want to start with you, Kara. You have a fund which is utterly distinct in terms of its focus. Tell us a little bit about Monarch and how it came to be and what the sort of thesis is as you define it down.
Yeah, so Monarch is a $250 million women's sports fund. We were the first and biggest to be raised, kind of back before people were thinking about it, but you had some early data points around it. We invest in teams, leagues, and rights, and really the most mature parts of the ecosystem, and we're also an impact fund. And so we try to do very few things well in places where you're gonna have cultural impact and financial impact, and essentially think about it as building kind of communities that are anchored in like the local market and are giving back to the local market and creating an experience for the local market, but that building global brands. And I'd say the final thing is, we invest in only the most mature parts, so that's soccer, basketball, golf, things where media revenue is up and to the right. And then it's at a stage where the market is, the women's sports market when we started was probably estimated to be zero.
Right.
And now it's a $3 to $4 billion market, but that's disproportionately going to very few opportunities. And it's at a stage where there's a lot of work. It's very, very different than the men's side because you're building fan base, community, player experience, all of these things, you know, kind of the way the NBA and the NFL might have been doing it 30, 40 years ago.
Right. So Nic, come on in here because, you know, obviously, and we'll stay with women's sports for the moment, before we broaden out a little bit, you're coming into the women's sports business, obviously with an expansion franchise in Cleveland. Tell me about that process and how you see it from an investability perspective.
Yeah, it's a great question. And we, you know, as we looked at this, a couple of things. One, we felt like it was a big gap in our portfolio of assets. We have obviously an NBA team, 3 or 4 different minor league properties, and then a PGA Tour event in Detroit. And so for us, we were light in the summer, and so seasonality had a little bit to do with it. But I also think, you know, when you look at the kind of common denominator of the investments, we're passionate about everything we're involved in. And basketball for us, you know, we were hanging around the rim, if you will, on the WNBA coming shortly after Golden State announced their expansion. And then we picked it up. We hosted the Women's Final Four in 2024. And we were probably already 6 to 8 months into the diligence of what we saw in the sport. And so after that, hosting that event, which was probably the most you know, sought after and the most demanded women's sporting event, at least from a collegiate basis to date. You know, Caitlin Clark, the South Carolina team led by Don Staley, that was validation for us. And then as you peel into the numbers, you know, since 2021, the growth of the WNBA is 598% from a viewership perspective. Or, sorry, from an attendance end. And even, so that's coming out of COVID, so a lot of people are saying, oh, that's a fake number. But then when you look at the growth from 2024 to 2025, right, it's 28%. And then viewership, you know, now with the recent announcement, Kara and I were just talking about this, the recent announcement of ESPN highlighting women's basketball on Sunday nights when you used to have Sunday night baseball, you know, or you still will have some Sunday night baseball. So, you know, from our perspective, we saw this hockey stick-like growth. And then the last thing I'd say is we look at the compound annual growth rate of professional sports assets from 2005 to right now. You'd see those somewhere in the 10 to 15.5, you know, % range. From 2012 to right now, that goes from 12% to 23%. And the NBA is the leader in that, 22.8. NHL is like 17 and change. And so even if you take a lower number, you take 15% on WNBA compound annual growth rates, by the time we put the ball in the air for real in 2028, this will be $441 million will be the valuation of this franchise.
Wow.
And by the mid-2030s, it's $1 billion franchise.
Yeah.
So from our perspective, you know, once again, it starts with purpose-driven, and then it evolves into will the business support itself, and what's the case for it? And this checked every single box for us.
And so, Kara, you know, based on those numbers, it's so fascinating to sort of square or synthesize what both of you were saying, because, you know, if you think back to Nic's point, just a few years ago in the W, and I know you looked at these numbers, it literally was at zero. That these existing teams were valued at zero. They were underwritten. You know, if a group was going in and buying an NBA franchise and a WNBA franchise, they often would underwrite the W
or even
zero.
less, right?
Or less.
There
yes.
were operating losses associated
Right.
with it. I mean, they weren't less, and there's been a lot of work that's.
But you'd
done
have to fund them. Yeah.
But it was
right.
dollars out of your pocket, not
Right.
from an enterprise value standpoint, but from an operating standpoint.
Yeah, and so if there's one thing that you obviously had religion on it early, and we can talk about Angel City in a second. But like, what was it that convinced a broader set of people, and not enlightened folks like Nic, but the broader, especially institutional class, who got behind this as an investable bit?
Yeah, I mean, we'll talk about Angel City in a second, but for me personally, I showed up at a game and had the time of my life, and I could it was a personal experience where I said, I want more of this. And I've always loved sports. I grew up as a huge Lakers fan, Dodgers fan. We've had an NFL journey in LA, but and just to have that feeling of, oh wow, this is what a men's sports game feels like. Here's what a women's sports game feels like, and there's nowhere for me to go. And so, I think my conviction came from actually trying to understand why it just didn't make sense to me that there were no extraordinary fan experiences that you could go to regularly and follow teams. And so the head of the U.S. Women's National Team Players Union said to me, she said, you thought like a venture capitalist, and we needed that because there was no data in the market. And it all came down to, and hopefully Nic will appreciate this, butts and seats, right? Yes, the whole kind of, where does this go? I question, you do need media revenue, and you need to build fan bases all over the place, and that's how the economics continue to grow. But for me, I sort of looked around and I said, how many fans do you need to show up how often for how many games to build a P&L? And I looked at it like a business person, and the answer I got to is you need 10,000 people to show up 12 times a year. So you just had to do something amazing 12 times a year. And then you could build a real P&L that was break even or better.
Right.
And I think soccer, in a way, convinced people it was possible in basketball. A lot of people in basketball have believed it for a long time, right? Like David Stern, a lot of people, right? It's why the WNBA is the most commercial league in the world, because it gets to benefit from a ton of the NBA. But I think until you see fans consistently show up across multiple teams, investors don't believe it.
Well, and to that point, I mean, the WNBA is sort of an overnight sensation after 28 or 29 years, right? I mean, and so, you've been in a lot of board of governors meetings on the NBA side. Obviously, this is a league, the W, that is attached, literally intrinsically, a part of the the NBA in a way that the NWSL is not part of the MLS. So that is distinct. How did you, Nic, see the attitudes among the existing NBA owners change toward the W as a business opportunity? And was there, you mentioned some of the stats around viewership, but was there something that sort of lit them up from the point where they really wanted to act?
Yeah, I think there's a few things. One, this is like a 30-year-old startup. I mean, it is. When we look at the WNBA, we think there's so many greenfield opportunities in front of us. Whether we'll be 16 teams. We have obviously announced Team 17 and Team 18, Detroit and Philly. We really got to get to 30 or north of the mid-20s, right, to really see scale. That'll mean more games. That'll mean more revenue opportunities. And so there's just, as you look at the next 10 years for this, so much growth. And I think, all the owners can see that, all the governors can see that. They're very business-minded people. But when you start looking at the fact that, four teams this year sold out every single home game, going back to Kara's butts and seats comment, every single home game. And some of those, two of the four aren't in NBA stadiums, but two of the four are in NBA stadiums. When you look at the Golden State Valkyries, right, with what they've been able to do, their per cap numbers and the Indiana Fever per cap numbers would put them in like the top 5 of NBA teams. Their revenues would put them in a really unique position relative to gate revenues. And so when you model them against NBA teams, this is not modeling them against the rest of the W. And so when you really start, and then I think what gave everybody a lot of confidence is the new media deal.
Right. With
the versatility of the new media deal to capture even more of the demand that is coming for this sport, because we really feel, And look, we kind of set the market with our investment. It was not a small investment, and Kara and her group are going to be in that investment with us when we close in a matter of days. We still feel like we're in the first or second inning, to use a baseball analogy, of what this league will look like over the next 10 years. And so that should give a lot of people a lot of optimism. And it is a wonderful place, as our chairman, Dan Gilbert, would say, to diversify and to have some fun while you diversify your kind of portfolio of investments.
Right. And so you mentioned sort of we talked about butts and seats, you mentioned the media deal. So Kara, let's talk about sort of the inputs that go into evaluating and valuing a sports team, especially in women's sports. Let's stick with that for a little bit longer. You know, what are the things, because I feel like, you know, and folks in this room will I think jive with this notion of, you know, we are considering sports more as an asset class at this point. But how, if at all, are the inputs different that you think about when you're assessing an investment in soccer, football, an investment in basketball or golf? What are you looking for?
Yeah, I mean, I think like sports in general is a pretty monolithic asset class, and there's different risk reward profiles all the way along. I actually think where we get to sit, it looks very asymmetric, where the downside is somewhat capped by franchise values, where you have a limited number of franchises, and then the upside is really like the blood, sweat, and tears, the market, who you're partnering with, et cetera. There is a ton of opportunity. If you have a chance to do multiple things, you know, as we're fortunate enough now at Monarch to do, there's an opportunity cost too, because it's a lot of work. It's a lot of hard work, right? And it's, yes, sometimes you feel like you're Biff in Back to the Future 2 with the almanac, and if you're lucky enough to get to partner with folks like Nic. But the flip side is it's you don't want to be passive. You don't want to be just kind of there writing a check. You want to be a part of the journey and a part of the story. And so specifically what we look at is we look at sport, right? I mean, the core components to any investment are actually, it's somewhat simple, right? There's a handful of core revenue drivers at a team level and a league level. And if we're going to dramatically simplify it down, it's ticketing, it's sponsorship partnership, it's merchandise, it's all the things around the fan experience. And then at the league level, it's rights-based revenue, which has historically been media revenue. And so we kind of look at what are the core elements at the team level to build a P&L there? Are you going to build something that's values aligned? We are an impact fund. 60% of our investors are women or non-white men, and we believe in creating wealth and building community with people who look a lot like the fan base, et cetera, et cetera. But so we do think values in this case drive outcomes too, and how you build your community and is it tied locally. But it's basically market, partner, operational excellence, and then league dynamics. And we at Monarch really think, if you look at all the data across the top 4 or 5 men's leagues, the top quartile of performers on the men's side, they tend to trade anywhere from 2 to 5 times the bottom quartile. And so you'd be great to be in any of them, but like to work with people that you want to go on a very long-term journey with.
Right.
As things go right, as things go wrong, it's how you respond to those things that I think will matter.
Right. And so, Nic, you know, one of the things that's become clear when it comes to, you know, some of the sort of sports platforms, one of the more successful and most successful you sit atop of, is, you know, multimodal in terms of sports, as you were describing in getting into W, but also thinking about the opportunity beyond some of those core things that Kara was just mentioning. And one of the most interesting things I think that you're involved in is this experiential piece through COSM. And for those who don't know what COSM is, explain a little bit about it, because it has become something that a lot of people are talking about, people are saying.
Yeah, you know, I think for us, a lot of people, the buzzword, at least in real estate right now, is mixed use, you know, and we think about it a little bit differently, where we want there to be really complementary experiential assets that are adjacent to our core assets, whether that's an arena in our case, or, you know, in Detroit where we have a lot of different commercial real estate assets that are going on. And so, but going back to the core of your question, you know, as we look at COSM, we were one of the first investors in the Series B round, and part of that round, you know, we really made it contingent that we wanted a COSM in Detroit and a COSM in Cleveland. And we're really seeing this. We're very excited about this. We actually just had a board meeting at the end of last week. Fully optimized, Cosms will bring another 750 to 900,000 people through their venues in a given year. And so when you think about, our venue with the WNBA team will bring 2 million people into our urban core. Cosm will bring another 900,000. We have 750 to 900, depending on how it all works out. You've got close to 3 million people from a footfall perspective. And the way you're able to monetize that ecosystem, whether that's through parking revenues, whether that's through hotels, whether that's through residential real estate or otherwise. And so for us, it's really about how all these assets fit together in a very unique complement of each other, both seasonality, so making sure we have this 365-day a year kind of always on approach. But COSM in particular is one of those unique assets. In our recent, we're about to start a Series C, and one of the things we talk about is you can access COSM anywhere from $11 to $900. And so the goal is that it's a platform that's affordable for anybody, and it's a premium experience. And when you look at these core assets, whether it's NBA, NFL, NHL, the Big Four, soon to be the WNBA as well, their ticket prices are, to sit courtside is a real investment. To sit on the ice at an NHL game, same thing. To do it at a COSM at an NBA game is anywhere from $25 to $65. Our ATP right now is $57 in Dallas and $63 in LA, which, by the way, is 30% higher than we thought it would be right now when we modeled the investment in the business. And so you're receiving a premium experience without necessarily the premium overhead of pricing. And so from our perspective, we think there's a whole demographic of people in this world that love that type of experience, want to invest in that type of experience, and it'll complement, once again, what we do in the live environment in our venues. And so, we're very happy with where the business is coming off of the LA and Dallas locations. We open Atlanta, your hometown, here coming up in May of this year. Detroit will be at the end of this summer, and then Cleveland will be at the end of next summer, and more locations to come. But we think it's, once again, it gives you this complementary kind of alternative to the normal four-wall brick-and-mortar sports property business that we think has a long run to it.
Kara, Nic used the word ecosystem, which seems like it's very relevant to both where you came from and where you are now. You come out of the tech world, the tech investing world. It feels like, as you think about the next phase of Monarch, you are thinking about the ecosystem, both the investing ecosystem, but also, as Nic was describing, these things that sort of go around sports, for lack of a better term, that go beyond the sort of pillars that play into valuation. How do you think about that from an investing perspective, and where do you see sort of the white space as it relates to the sports ecosystem investing landscape?
Yeah, I mean, if you think about the reasons, the things that make us human, the things we want more and more of, there are very few of them, right? And it's usually involves like the opportunity to gather in person and build connection. In a way, sports is like socially acceptable tribalism. We get to have every human emotion in the course of a game. And follow rivalries and players and be inspired by these stories, right? Like, gosh, we got to experience them in a beautiful way coming out of the Olympics. Sure. And so if you think about this as like Marvel, right? And how big these franchises have become, but it's IP that's very difficult to replicate, or Star Wars. You look at the Cleveland Cavaliers, you look at the LA Dodgers, you look at Angel City. These are communities, these are brands, these are places that can go in a lot of directions from a content standpoint, from a partnership and sponsor standpoint, from a real estate standpoint. And so we at Monarch look at how do we do a few things very well, where maybe there's 20, 30, 40 communities and brands in women's sports you would want to be in the world if you want to have impact at that scale. And then how do you kind of keep layering products and support alongside of it? And how do you show up as a partner in a way that's right for that team, that league, and that community? Mm-hmm. So I think we're just at the beginning. I mean, Nic kind of described the numbers early on, but when we started Angel City, which was the first majority female-led professional sports team in the country, I'm one of the 3 co-founders, we took it from 0 to 30 million in revenue the first year. We built it with mission at its core. We brought sponsors in who'd never been brought in before. we didn't know we were going to do all those things, but it really started to show people something really important, which is you can build a real profit and loss, like you can build a real income statement. And now you have a number of women's teams that are doing 20, 30, 50, 60, 70 million in revenue, which compares to men's teams that are doing, upwards of $1 billion in revenue. And so it's kind of like, how do you take best practices from the men's side? And that's probably like 80% you'd want to take. But what's the 20% that's different about Cleveland, about women's sports, about basketball, about that community? And maybe the last thing I'll say is if you look at the data across most teams that have sort of a men's counterpart, take the Valkyries as an example. Only 7% of their season ticket holders are Warriors season ticket holders, right? And so the next step I'd say is, these fan bases are younger, they're more female, and we spend 80% of consumer spend. So when I want to be really provocative, and it's
we women,
yes.
Yeah,
me, I guess I spend a lot, occasionally on shoes and my children, and healthcare and things of that nature. But if when I want to be provocative, it's a ton of hard work between here and there. I think the women's sports market could be bigger than the men's sports market at some point in our lifetime, just based on consumer consumption and building communities and fandom. And that is the infinite place that this can all scale. There's only so many tickets you can sell, but media, brand, et cetera, that can scale kind of infinitely.
Well, Nic, as we start to wrap up a little bit, I'd be remiss if I didn't talk to both of you about this element of community and sort of community investment that is both, it feels very baked into what you both do. Kara sort of mentioned this or alluded to it. 10% of all sponsorship dollars for Angel City from the beginning went back into the community.
Yeah.
I have that right?
Yeah.
Okay.
Right.
Nic, when you think about that element, this sort of community connection, I think it's fair to say that, all of us, the three of us included, care deeply about sports. We care deeply about our teams. We associate with them. To your point, it's the range of human emotion. It's deeply, deeply personal. How does that change the way you have to show up in your community?
Look, I think, Dan and I talk a lot about this. We really
Dan Gilbert.
Yes, Dan Gilbert. Yes, sorry. We talk a lot about we're stewards of these assets while we're in these positions, whether it's, himself as chairman or myself in my current role. And I think that mentality helps to orient how you create real action and how you do show up in the community. And so for us, every dollar we generate goes back into either the product you see on the court, the experience that we curate for our fans, or the community in Northeast Ohio and in Detroit, Michigan. And so when you look at it from that perspective, especially on an annual basis, because Dan lives in the long game, we live in the long game. These assets, he bought this franchise for X and it's already worth Y, and he's in a great position for that. And I think that's really the way you have to do that, because you have to understand that these fans, they expect more of you as owners or as custodians, once again, of these great assets. And so for us, everything we lead with is exactly how we do show up in the community. When we bring the WNBA team online in 2028, we'll have invested $1.1 billion in Northeast Ohio, not in expansion fees, but in infrastructure and in community giving. And during Dan's basically, his 21 years now as owner of our assets. And that's real money. That shows up in brick and mortar, that shows up in court refurbishments, that shows up in community centers that now are updated and refreshed for people to be able to use them. And so we think that's really important. And we've got another, $1.5 billion to $1.8 billion in the pipeline over the next 5 to 7 years. That is more than just brick and mortar. It's about creating a different narrative for the community that we serve. It's about creating a different trajectory for Northeast Ohio. And it's about creating exponential opportunities that in 10, 15 years, we look back to as the heartbeat of kind of the transformation of our city and of our region. And I think when you start to look at it like that, and then you apply the multiplier effect that lives with these assets, there's really no finish line to this, but as you start to think about what the finish line could look like, you start to see remarkable positive returns that show up from an investment thesis perspective. And I think that part is really important because it isn't the easiest when you're making the investments, especially right away. As you're starting things, you're doing things for the first time, or you're doing them in non-traditional markets, maybe like people think we are in Cleveland. We don't think that way. But I think as you look at that and you start to line all these things up, you start to really see what these positive returns can create in community first and in P&L second.
All right, so as we wrap up, I'm going to pose this to each of you. If you are investing in sports, and you can call it sports, women's sports, however you want to take it, what's the one piece of advice, Kara, you would give someone as they're assessing either whether to get in or how to get in?
I mean, really, God, I had so much to say on community. There's a reason I'm sitting here with Nic. The way you do anything is the way you do everything. And I really just want to say, the way you show up when you're looking at doing a transaction, this will be advice. Looking to do a transaction, how you treat someone in the hallway, how you think about sports teams as community assets that, will make you a lot of money and is a really good place to put your capital. But my advice actually along those lines are, know why you're doing it, and that it's hard to get into the best things, right? And why are you doing it? Are you doing it for return? Are you doing it for joy? Are you doing it for community impact? And then there's a lot of different ways to show up based upon your answer. I think the best things are when you're doing it for purpose, joy, and financial return, and then pick your partners well. Like, you're gonna be in it for the long run, pick your partners well, things are gonna go wrong, new things go wrong every day. And if you're very involved, is this somebody you wanna talk to at 10 o'clock at night, because it's gonna happen? And then if it's just for the joy and purpose part, find small ways to get involved. You could call me. You could call, maybe, I don't know if Nic will take your call, but find small ways to get involved. And then I honestly think, like, buying a season ticket or buying a ticket and building community in the stands. My parents feel like the Annenbergs or the Gettys in LA now, and we're not. But the people they sit with at games come to our family holidays now, completely different socioeconomic backgrounds, et cetera. And it is like a place where we can be human, build community. So joy versus returns, and then find the place to start.
I would agree with everything she said. The only thing I would add, maybe more akin to this audience, is when you think about sports as an asset class, or specifically women's sports as an asset class, trust it. It's real and it's not going anywhere. And if there's any place it's going up and to the right. Which, if you could make a bet on that now, and you could realize what that bet looks like in 10 years, I think a lot of people that are very smart would be making those bets. And we don't think we're very smart. We just think we're in the right place at the right time with the right purpose-driven motives. But it is a real asset class, and trust it.
Great. Well, watch this space with the two of you. I really appreciate both of you, and always great to spend some time. Thank you.
Thanks,
Thank you, everyone.